I'm very excited and honored to have a distinguished panel for this session, which needs little to no introduction. We're joined by Mr. Amitabh Kant, CEO Niti Aayog, Mr. Sanjeev Bikhchandani, co-founder and co-head, and Mr. Mohandas Pai, Chairman Manipal Global Education Services. In case anyone has any questions, please feel free to use the Q&A box below, and we'll try to address the questions during the session.
Thank you. Thanks, Abhishek. And thank you, Mr. Amitabh, for such an enriching and exciting speech over the internet economy in India. Welcome, Mr. Mohandas Pai, Mr. Sanjeev on the Ground Zero 5 panel. So good to see all of you. I think I have probably we've sort of selected few questions which we would like to run through the panel and understand what is the view which the esteemed panel has on some of these. So maybe I'll start with Mr. Amitabh on leapfrogging, as you just spoke about, and there were quite a few billions we heard on the speech, right? So really exciting to hear that. Now, if we just look at the leapfrogging with technology as one of the key themes, what can India do to identify and accelerate such opportunities? What is your message to the entrepreneurs and investors about really identifying and unlocking these leapfrogging opportunities?
So technology is changing our world at a very astonishing pace. In the span of a few short years, the internet, mobile devices, the social media, all have transformed how we interact and get information. India is one of the highest consumers of data and it's digitizing its infrastructure faster than the rest of the world. We now need to channelize this strength, clean up and annotate these humongous sources of data, and create structured sets that can power artificial intelligence algorithms that India needs. AI, blockchain, 3D printing, space tech, genomics, all these are sunrise areas of growth. They offer very unique solutions to the world's most pressing problems, and we must actively promote the applications of such technology across all areas and leapfrog. Just look at India's IT and ITS industry today. It is a global powerhouse. It's a massive $167 billion IT industry that comprises companies that provide software services, back-end IT support, and a 55% share in global IT services and outside sourcing. But we now need to lead our shift away from being a software outsourcing destination to being a product platform first nation. COVID-19 has induced a need for mammoth investment in healthcare and biotechnology, and therefore ramping up investment in areas of genome sequencing and CRISPR will promote an enabling ecosystem in our healthcare infrastructure. My view is that technology has the potential to break barriers that are visible in our infrastructure and create a new wave of very inclusive social development, which can be scaled up to unimaginable levels, and India must take the lead in.
Thank you, Mr. Amitabh, for your views on this, and I'll quickly switch to Mr. Pai. And I think, as Mr. Kant spoke about, India has been a leader on IT outsourcing, on soft, and we need to make a switch from software outsourcing to product development and all. Who better than you, Mr. Pai, who've been one of the pioneers in IT outsourcing? You see the first wave of tech. Now, what do you really make out of this leapfrogging, and how can really India switch from software outsourcing to product, and your views on that?
No, I don't agree that you got to make a switch. Software servicing will grow. It will become a $300 billion industry for India by 2030. That will grow. We have to improve our products capability and develop it. And for the products capability to develop, what do we lack? We don't lack people with tech. We have deep tech knowledge. We don't lack startups. What we lack is capital. For example, China invests $65 billion a year in a starter system. United States invests $135 billion. India only invests 11-12 billion, out of which only 10% is Indian capital because of very bad tax laws. What we need to grow to become a product nation is to make sure that we have more capital coming in and more capital within India. It's only now that big institutions like LIC and the pension funds have been allowed to invest. Till now, they were not allowed to invest. Can you believe that? They've got a balance sheet size of 50 lakh crores. Now, out of about 58 unicorns, maybe 35 unicorns are headquartered outside India. Out of about 160 unicorns, majority are headquartered outside India. And our foreign exchange regulations are very antiquated. They are reminiscent of the FERA regime, which you might not know, because I don't know whether you people have gone then. We have FEMA for the last 25 years. So we have a very antiquated regulatory regime. It is not a switch. You don't make a switch. That's a huge industry. That will continue. We have to grow a product industry, and we have to do that. For example, China is investing $150 billion in AI by 2022. Now, I know Niti had a program of $1.5 billion for AI, which is very, very small. But I don't know what happened to it because we have not heard about it. Where is the Indian investment in original research in AI? We want 50 engineering colleges to have a PhD program, 10 maybe 20 each in AI and big data. And government funding must come. We need research funding. So I think there are building blocks to create the product nation. Of course, people, everybody in the system, young entrepreneurs are growing it. That will continue to grow and that will become very, very big. So I see a great future for Indian product companies.
Thank you, Mr. Pai. And switching to Sanjeev, I think 1995, Noida was starting InfoEdge. I think 25, 30 years back, right? So very, very unlike setup for starting a product company out of India market. I think very limited funding as well from anywhere, right? So Sanjeev, looking at India market, and I think as Mr. Pai rightly pointed out that while there are a lot of make in India and companies which are coming out of India market from Indian entrepreneurs, the capital which is coming for this leapfrogging is coming from outside Indian market. So eventually the shareholding gets switched and diluted in non-India favor. Coming with your experience of creating a company very early on, what is your view on this particular situation?
Look, we need all the capital we can get, right? Whether it comes from overseas or from India. So we need foreign capital, no two ways about it. And it's most welcome. And because the West has more experience in early stage venture financing, it is only natural that they will take the lead and they'll be the first investors. But I think as Mohan said, look, we need more and more Indian risk capital of Indian origin. And, but we will take whatever capital we'll get and we'll still need more. So I think if enough sort of incentives can be done to encourage Indians and Indian corporates, Indian institutions, Indian HNIs, individuals to invest in early stage, private companies, startups, I think it'll be really beneficial. And there are a number of sort of things that can be done by the government, which perhaps we have discussed several times offline, and I think some of it is happening, and some more needs to happen.
Thank you, Mr. Sanjeev. And I think I'll probably try to close the loop on this with Mr. Kant, right? So about capital coming from India market for the Indian ecosystem, tech ecosystem. What is that which government is doing, and what more can be done to really accelerate that? Because I think that's one of the big things, issues which we can solve for. Sorry, Mr. Kant, you're on mute. Can't hear you.
You're still on mute, Amitabh.
Can you?
Yes.
So my view is that government needs to put much more money in fund of funds and create many more fund of funds in a very big way. And they should support a number of venture investors and venture funds, and that will really assist in creating an ecosystem for startups. Secondly, and I entirely agree with Mr. Mohandas Pai that all these large enterprises, LIC, SBI, all financial institutions must be, and especially pension funds and insurance funds, especially insurance funds, must be all asked to invest in our unique startup movement. And that is the only way it will grow, because we are not interested in getting all the Chinese money here. We are interested in Indian money getting into our startup ecosystem. And thirdly, I think family houses and high net individuals in India still haven't started investing in the startups in the manner in which I feel they should provide the momentum. And therefore, all large family houses and high net individuals must invest in the startup movement. And in the long run, that is what will help us in really driving this movement in a very big way forward.
Just imagine, Anil, just imagine we have $40 billion a year to invest. Look at what is going to happen to this country. We are starved for capital. And we are starved for capital for many reasons. To me, the biggest one is the lack of a regulatory response till recently for LIC. We have the Canadian Pension Fund coming and putting $10 billion into India in a fair number of startups. Temasek putting money. They take the foreign exchange risk of rupee depreciation, the currency risk. They take the risk of investing and make a lot of money and they invest. But our own LIC, which is here, using our money, it has got a balance sheet of 40 lakh crores, hasn't put any money in startup. Have you heard of anything? They have not. Why is that? I mean, that is the question that government must ask. Second, RBI regulations are there. For example, I'm sure Sanjeev will agree, if some company comes and invests in an Indian startup, foreign exchange regulations say you got to give a lot of documentation. When you sell, you got to get a valuation report. What is the value? Know about what is the value? Value when you buy, if Sanjeev and I buy a company, we negotiate with the founder. You quote a price, we quote a price, we agree on some, that is it. There is no model. Is there a model? We have a model. But the model doesn't determine the negotiation. They want a valuation report by somebody who does not know what it is, goes by conventional value system, and then file. And then we got to get permission to remit money outside. These are all hangovers of the Ferra past. Since Amitabh Kant is here, I would urge him that look at these forest regulations and relieve this burden for us, make the velocity of business better. That is why foreigners say, we want to invest in you if you are in Singapore. Come to Singapore, you'll invest. Easy to put money there, then you can be a subsidiary here. And then, money can come. We don't want to invest directly in India because of Forex. This is a complaint we've been talking to Amitabh for the last 2-3 years. I'm bringing it up again because we want an urgent resolution so that we can boom. We want $40 billion. Sanjeev, $40 billion coming in every year. We will create miracles in this country.
Yeah, so a lot has been done for the startup movement and a lot more will be done. In the last 4 years, a huge amount has been done in terms of bringing ease of doing business and ensuring that funds flow to startups. And a lot will continue to be done. This is a constant process of evolution, and we will push the LICs and the insurance companies to invest more in startup.
And RBI too.
I think switching to the
so you know what I think? Actually, the government is a complex organization, right? There is one imperative to support startups and investment in startups, but there are a whole lot of other ministries and departments which say, hey, if you create this rule here, it will impact there, right? And that then becomes a pushback. Okay, now RBI's sort of reflex is if money is coming in to India, it's welcome. We won't ask too many questions. But when money is to go out, right, it is our solemn duty and a responsibility to ask a lot of questions. Now, they are doing their jobs, but in the process, the startup movement is being hurt, okay? Because money wants to come in and go out at will, right? And that's what they're able to do if they ask the startup to be domiciled in Delaware or Singapore or wherever. And that is the law of the rules of global capital. Right? If you want to do that, if you want to play global capital, I mean, you will have to ease out some of these things, or you will end up with startups domiciling overseas.
Sanjeev, foreign investment.
Mohan, your voice is cracking.
Mohan, your voice is breaking. An regime for startups is easy. Is easy. No, I'm saying that if you invest in the stock market for foreign investors, they can move in and out. They can put in money, remove money is easy. Have the same regulatory regime for startups. It's a very simple thing to do. The problem, Sanjeev, is we wrote to the RBI governor. We don't even get a reply from RBI. See, we need proactive government organizations because things are moving very fast. We can't afford 1 year, 2 years of delay. Since Amitabh is here, we got to be frank. Okay, sorry, Anil. We'll go to the next one.
No, that's fair enough. See, I entirely agree with what Mohandas Pai is saying, that the government has initiated a large number of measures for startups. That whenever issues have cropped up, we've tried to find a solution. for all the startups. There are many other agencies like SEBI. SEBI has also taken a large number of
Yeah, lot
proactive
of jobs.
Mr. Mohan. Then RBI is a very vast organization, and I'll personally speak to the governor and try
Yes,
to
please.
see what best we can do for them. And I will work along with Mr. Mohandas Pai. It's a job to ensure that we create a very unique ecosystem for our startups and ensure that they have much greater level of flexibility and openness than established businesses. That's the only way. Without capital, how will we create another several Silicon Valleys in India? That is the key to the growth and evolution of startup. And therefore, we will all work together to try and bring this change of mindset. And I'm quite sure that the RBI is a very dynamic governor. We'll be able to work with him.
Great. Thank you, Mr. Kant. So moving on to my second theme, and probably I'll just pick Sanjeev's brain on this one. In terms of the trajectory which Indian tech companies need to take, there are two very different dimensions which probably they need to really grow on, right? And we speak about one is Indian companies really becoming large and global, right? So they go out of India market, solve for Middle East, solve for Europe, solve for other countries. And you have experience of doing that with Zomato, at least in some form. And then second is really start going deep into the tier 2, tier 3 and rural India and start solving for that. I think both of them are very, very interesting and important challenges to really solve for as a next phase of growth for Indian product companies. Coming with the experience of Zomato and coming with the experience of Naukri.com, Sanjeev, would be good to have your views on any one of them or both of them.
Yeah, so look, I have a slightly contrarian view here. Okay, my view is that great product companies, great products are conceived near where the customer is. Why are such great product companies coming out of the US? Because the US market is large and their first customers were American customers. So Google came out of the US, Facebook came out of the US, Yahoo came out of the US, Microsoft came out of the US, right? So till you have a large domestic market, you probably will not be able to build global consumer internet companies, consumer companies so easily, right? However, Naukri was conceived in India, catered to the Indian consumer because we are close to our consumer. So fundamental rule is great consumer companies are created where the consumer is, right? So if you want to build a global consumer company out of India, not happened so far simply because global consumers are global. They're not in India, and the Indian market is not large. It is small. So, which is why a Google doesn't come out of India, or a Facebook doesn't come out of India, or a LinkedIn doesn't come out of India. It doesn't happen. Now, because the US is the largest market, outcomes are that much more profitable for companies and therefore for investors, which is why the US has got the largest amount of venture capital investment, because they are willing to put in more money at higher valuations to fund companies because they know the domestic market is large, right? And therefore they'll get the kind of outcomes. So to some, and the second is China, because domestic market is large, right? And which is why, we have to actually grow hand in hand with the economy and the market. We cannot outstrip. Now, there will be some B2B SaaS companies or the Indian IT outsourcing companies, which have grown in global markets and are growing in global markets, but they are not consumer companies, right? So therefore, it's going to be difficult, in my view, for India to outstrip the growth of our economy and go global on consumer product companies or consumer app companies. However, solutions tailored for India is where actually a lot of consumer growth is going to come from. So global growth, B2B companies, consumer growth, Indian market. That's the way I see it.
Very interesting. So, so the point is, if we have a large enough Indian market, then the consumer companies can have a sustainable, profitable market in India.
Yeah, but look, a large consumer Indian market does not come overnight. It's what daily growth, monthly growth, quarterly growth, annual growth in the economy as a whole. So if we grow at 7, 8, 9% GDP every year for the next 10 years, we'll get that.
Yeah, India needs to grow at high rates of 9 to 10% per annum, year after year, for 3 decades or more. I think that is important. That is the crux of everything. I think the basic fundamental issue is that we've grown at those rates, but we've grown for limited periods of 5 to 6 years. We need to achieve that level of consistency for the next 3 decades.
Anil, we are a $3 trillion economy. China is a $16 trillion economy. United States, a $22 trillion economy. So if there is a product company here, the market here, unless they go out, to go out, you need capital, it is expensive, and your product should be configured for the consumer in the United States or for the global markets. Now, many of our product companies are configured for the global market, but they need capital. And if you give them a lot of capital, they can go to the US, they can take the risk and they can grow. And we see many of them happening. I see some of these small startups. For example, Zoho was in India, they went out. Freshworks was in India, they went out. They become multi-billion-dollar enterprises. Could they become multi-billion-dollar enterprise in India? No, because the market doesn't exist. Can somebody pay $3-4 billion to a product company in this country? No. So the economy has to grow. When we become, say, $10 trillion by 2032, if Amitabh Kant continues to run Niti Aayog till then, we will become, then possibly, we'll have these giant companies coming from here.
Thank you. Oh, thank you very much. I think switching to the more recent COVID-related theme, right? So I think one of the things which we've been seeing is, and I spoke about in our research as well, there is a significant uplift which COVID has provided to the tech businesses, internet-based businesses. And of course, I think a lot of credit for that goes to the government of India for the amount of the work which has been done on laying the infrastructure, which is about the cheapest data, access to internet, UPI, and so on. I mean, had those infrastructure not been there, that adoption would never have taken place. Now, I think the internet companies are reaping benefit out of it. The question now, which probably we have in front of us, and Mr. Pai, maybe you can take this one. How do these internet companies sustain the whole uplift which they have got out of COVID, right? So they've been growing at 40-50%, really a neck-breaking pace. How do they really sustain rather than falling off the cliff once the pandemic goes on?
The COVID was a one-off event by which the whole country went digital. And we are lucky because remember, Prime Minister Modi gave us the vision in 2015 of digital India. It actually worked. Everything was in place. The telecom networks were in place, policies were in place, and we had edtech, we had fintech, we had consumer technologies, we had health tech, all kinds of things were there, and people could do it. Of course, the rural sector in education fell behind because they did not have the tools. That is a sad thing. But we had all this, and that's given a boost. That's why you saw it 2x, 3x. Now in future, when India comes back to normal, they must accelerate the growth that they have seen by investing in marketing, investing in better product development, and investing in building the supply chain. The supply chain has developed. So I think it's a question of they've grown up, they got a big boost. Now they must go forward and they must plan it out for the next 2 or 3 years. And they must make sure they have enough capital. I keep coming back on capital for a very important reason. Startups spend money in 2 years what a normal company spends in 10 years to grow. And they want the 10 years growth to come in 2 years. That's why this huge rush of capital is important. India has 16 unicorns this year. We'll probably end up with 2025. We got 58 unicorns. We'll be 150 unicorns. I think the most exciting part of India's economy is this, aided by COVID. So, the field is open for them. And we are all very excited. You can see Amitabh bursting with excitement every time he speaks about it because he's worked for it and he sees it happening. You see Sanjeev trying to cool down his enthusiasm and excitement because a listed company, he can't tell you everything that he's planning to do. But, this is exciting.
Thank you, Mr. Pai. So, Sanjeev, any views on this apart from capital? What are the advices which you have for the internet companies to really sustain the uplift?
So look, we run 4 businesses ourselves. We have invested another 25 more, right? So we have a sort of bird's eye view of about 25 or 30 different verticals and businesses, all of which are digital or digital enabled. Right. And what we have seen is that, look, in the first lockdown, last March, April, everyone had a setback because it was unexpected. It happened suddenly and people were figuring out how to work around things. Right. The second lockdown, which happened this April, right, has not impacted companies that we are witness to so badly. In fact, some have grown. So people have adjusted, adapted. But, most importantly, the use of the consumer has got more used to going digital. Simple example, I was very camera shy and would hate to do video conference meetings. until COVID hit, right? And now it's second nature. And I'm saying, why should I commute? So, another example, Naukri has a sales force, which a B2B sales force that traditionally has been doing face-to-face meetings with our clients, physical meeting and meeting, right? COVID lockdown hit. Now, a typical sales guy could do 2 or 3 meetings a day. Now they can do 11 to 12 meetings a day. There's no commuting time. There's no waiting at reception. There's no that ritual of having a cup of coffee and spending an hour in a meeting. You do it in 20 minutes, over and out. Very importantly, our Hitesh Oberoi, our MD and CEO, can join any sales meeting anywhere in the country, right? So in terms of productivity, a situation like this, massive increase, 5x, 6x. So everybody's adapting. Look, some are badly hit. It's not that they're not badly hit, but many have adapted.
Got it. Let me take the last theme, and I know that we have about 5-6 minutes in the discussion today, and I'll go to Mr. Kant, right? So, Mr. Kant, when we speak about Make in India, and at least in the tech space, it's important that at least in some other sectors, the government is able to safeguard the interest of the Indian companies at early stages. And we've seen that some of it happening in one way or other, like where some of the Chinese companies got banned, and the Indian companies have got some breathing space to really grow. What is the kind of a view which Indian government has on this, on giving that cushion or breathing space to Indian companies before they really start and get ready for the international and global competition?
Yeah. Let me first touch on the previous point that you had raised. And that is that, India has massive advantages, but quite often we keep getting into sunset areas of industry. And once you get into those areas, it's impossible to become a global champion because other countries have already taken the lead. And other companies have moved forward. India must get into sunrise areas of growth. And those sunrise areas of growth, we must build size and scale. There is going to be a massive amount of disruption in mobility, two-wheelers, three-wheelers. There'll be disruption in advanced chemistry cell batteries. There'll be disruption in green hydrogen. There will be disruption in genomics. All these are areas, there'll be massive disruption with 5G coming in. So India must take the lead. And secondly, one must understand that actually the key to everything will become data, and India will have humongous amount of data. And therefore, our ability to be able to have data hungry young entrepreneurs who are able to use data and use and also have the other big challenge will be to reorient our IITs and triple IITs so that we are able to create AI algorithm engineers. We should have the computing power. We should have product managers. And let me tell you, there is a huge shortage of product managers in India. If you don't have product managers, if you don't have AI scientists, if you don't have product designers, we will lose this opportunity. And therefore, we need to reorient our engineering courses, and we need to get into the sunrise areas of growth. That is very critical. Secondly, when we talk about Make in India, we should clearly realize that there is a massive disruption taking place across the world. Global supply chains are getting disrupted. Countries across the world are looking at alternative sources, and therefore this is a massive opportunity for India. And we should become a very integral part of global supply chain, and the production linked incentive scheme that we have launched is basically meant for that. Secondly, Indian entrepreneurs across sectors have been able to develop solutions not just for Indians living in Tier 1 cities, but for the farmers, the small and marginal shop owners, the handicraft worker, and people living in Tier 3, Tier 4 cities and villages. As the BharatNet spreads to villages, we must be able to create a business model. Otherwise, BharatNet will never work if there is no business model. Let's not look at only education and health, but a business model. And therefore, we'll have to build product. Entrepreneurs will have to increasingly build products across sectors, whether it's fintech, edtech, or deep tech. And with increasing internet penetration and expanding technology access, we expect more entrepreneurs to serve, to tap into not only the Indian market, but the Asia Pacific market. Now, we have unique demographic and income mix, and this requires a very heavy localization of products and solutions for them to succeed at large scale. I mean, without that, localization is the key. And hence, an ecosystem needs to be created to promote product startups from India, not only for India, but for global markets to yield results. And therefore, I think this Make in India should be seen as an opportunity to penetrate. It's very important to understand this, that it's not about protectionism. No country in the world has succeeded on protectionism. It's about penetrating global markets on the strength of India.
You know, Anil, I must say this since Amitabh is also here. I watched industrial policy for the last 35 years. For the first time, a government policy has a set of incentives under PLI backing it. This is unbelievable because we always had policies, government will issue circulars and say you are free, you can do it, but there's nothing behind it. The first Make in India policy was beautifully done. I saw all the seminars, but there are no PLI behind it. Now with PLI behind it, we are going to boom. We're going to become an electronic exporter. We're going to become an AC exporter. We're going to have huge industries because it's building up scale to meet this country. And we must understand in India, the buying power of the consumer is limited. So what should you do? Mass production, bring down the price, expand the market and take it over. And then you have the whole world. That's what China did. Now, one suggestion for Amitabh Kant, we need a chip industry. A chip industry will require investment of $10 to $15 billion in technology. Maybe we should ask, Mukesh Ambani or N. Chandrasekhar of Tata's or Premji, who can easily put in $5-6 billion to talk to TSMC from Taiwan to set up a chip factory in India, invest between them $10 billion. Government can put in 1 or 2 to create the chip factory, because without those chips, our future in electronics is not going to be so good. Because if we don't have chip manufacturing for a very, very large country and a consumer like India, and we don't have the technology, we're not done it, and we need TSMC, and Taiwan is under threat by China, and there is a fear around the world what will happen. So we must get this strategic thing to do here. For that, we require big capital. There are only 3 people in this country who can write a check for $5 billion tomorrow. Mukesh Ambani, maybe Azim Premji, and N. Chandrasekharan. We should have a chip plant. Now, Amitabh, please make the chip plant $10-15 billion of investment with TSMC. Your full focus to change India's electronic dynamics in the next 10 years.
So let me tell Mr. Mohandas Pai that there's a lot of work going on in this direction right now. It will not be appropriate for me to spell it out on this forum, but this is our topmost priority. We are working with this.
Thank you.
And we are in touch with TSMC as well.
Thank you.
Great. Thank you very much, Mr. Kant, Mr. Pai, Sanjeev, for taking out time today and talking to us about your thoughts on the digital India and how can we really progress. It's been such a pleasure hosting you today. Thank you very much.
Thank you.
Thank you.